All right, so if you're a real estate investor right now and you're thinking about industrial real estate investing, you're probably thinking big warehouses, industrial fulfillment centers, Amazon, all that. That's not what we own. And I believe right now that's not the right mental model for real estate investing because that market is experiencing the highest vacancy of any industrial real estate space. So what we're going to talk about in here is a different type of commercial real estate or industrial real estate investing. Different types of tenants. There's 4 types. Small industrial tenants. We're talking about first the contractor. So you got plumbers, electricians, pavers, HVAC companies. I grew up paving for my dad. I worked as a blue-collar worker throughout high school, college. So I know what it's like, and you want a cheap, easy place that you can park trucks, do your mechanical stuff out of, meet everybody at the shop, have a beer after, go home. But it's got to be cheap. The next thing is the local distributor. So a food service company, medical supplies, someone that does e-commerce, that does shipping. They got to load it in and then load it out. It's got to be quick and it's got to be close to everybody in the area that they serve. That's the last mile, what we talk about. All right, the third is manufacturing custom fabrication. So a lot of cabinet makers or items that you get put in your home, they're not actually built or installed somewhere in China. They have to be built in America somewhere near where they're going to be installed in the home. So these tenants tend to be sticky because that can't be outsourced and it needs to be geographically around the housing that's their customers. And then the last business we're talking about is gymnastics studios, martial arts, gyms, any type of service business. I mean, you could even get hair salons. I've had cannabis tenants. These are tenants that don't want to pay retail. They don't need per se the frontage, but they still need to be in proximity of where their customers are and easy to get to. And now with Amazon, people can be found easily, like doing this social media here. So people can find that business and they can still have a retail storefront, a warehouse in the back, and cheap rent that they can make money on their small business. But why are we talking about these tenants, right? You don't think about them, you just go shop there. They're durable tenants in real estate. That's why I've focused on this type of investing throughout my career. I started with mobile home parks, then with self-storage, and now small bay industrial the last 5 years. And it's diversified streams of income. So yeah, they might not be the credit tenant. They might not be the Amazons of the world. 50% of all employees are employed by small business in America. I like that stat because I want to support small business and I want to make sure that I'm serving the larger demographic in the country. So here's why these types of properties are special. So contractors, they get to a point where you can't park more trucks in front of your home. You can't store more supplies in your residential garage. Certain office tenants or distributors can't store any more stuff in their WeWork space. A manufacturer runs out of space. You can't do the manufacturing outside. So at some point, a business outgrows being remote and they need to be in a physical location. Now compare that to retail where e-commerce is going to be a permanent threat and people are going to keep buying things online. Compare that to office where remote work is changing. Small bay, or also called flex space, meets the demand of all of it. So you have the warehousing space. If you need a little office space or a conference room, or if you need a showroom, you need a place to service your customers in the front of the building. Small bay does that, but it does it at a fraction of the cost. So in fact, I've been going to Houston and Dallas. I've been looking at that market. I love how much they're growing even in this economy in 26. And that's where I'm putting my money where my mouth is and investing in those businesses there. All right, so let's talk the economics. So what do the lease terms look like? Well, they're going to be a mess with some of these properties. A lot of them are going to be gross leases, meaning that the tenant just pays one flat bill and then they pay their utilities. And then the other type of lease is called a triple net lease. That's where the tenant's going to pay their pro rata portion of the taxes, insurance, management, maintenance, common area expenses. Those are triple net leases and for higher quality demographic type properties. The gross leases are going to be your more blue collar, service-based type companies that just want one flat bill. What's my rent? Because I need to know if I can afford it. So with these types of tenants, you're going to look at probably shorter term leases, 1 to 5 years, but with properties that are not stabilized or you're buying from mom and pop owners, they're going to be short term leases, month to month, year to year. And that's not a bad thing. Some of these tenants want that flexibility, and actually because there's so much demand for this product, we like to go year to year because that gives the flexibility of increasing rents when inflation kicks in And when we incur more costs as a landlord, we can keep raising the rents to cover it. And the last piece that's important to the puzzle of investing in industrial real estate is going to be tenant improvements. So think of a small business starting in a location. If they're a restaurant or a food manufacturer, they're going to need floor drains. So those floor drains, someone's got to pay for them. So the tenant can either come out of pocket and buy those floor drains, or the landlord can come out of pocket and pay for them. Now, it depends on what leasing market we're in, but ideally, the landlord, myself or you as the investor, you want to offer free rent, you want to offer discounted rent for a period of time, and then have the tenant have skin in the game and let them build out the space, putting up their own hard dollars, right? Because it's human nature. The more you put up, the more you risk, the more you're going to fight to keep it. And then they're vested in the space. But you gave them a concession to get there with that tenant improvement allowance of free rent. So we're always looking at what are the tenant improvements that a tenant has invested in a space, because we know that probably is going to allow them to stay there longer. Or if we buy the space, how much are we going to have to tear out these old tenant improvements that aren't needed anymore? And that increases the cost of the investment. So we're going to have to get the space ready for the next tenant. So we're dealing with these mom and pop tenants. They're small spaces. They're on short-term leases. What's important to discuss is the credit of the tenant. Some sophisticated investors or private institutions or funds, they scoff at having these types of tenants that maybe are small businesses. They don't have large revenues, are not fancy. It doesn't matter. Like, what we look at is they serve a durable need within a 30-mile radius of the housing in the area. So someone's got to service the pool. Someone has to do the landscaping. Someone has to pave the driveway. All these things, they're not going away until robots do it all. But for the time being, I mean, we have to get the supplies there as well. So looking at the tenant credit, what we do is look at what's their Google My Business rating, how long have they been in the location. We try to get some profit and losses or balance sheets from the tenants to get the credibility of the tenant. But we have to understand who we're serving. Some of these businesses are smaller, so we're not as worried about the tenant credit. We just want to be sure that they're established and that they have a real legitimate business. And most likely, that's their livelihood and they're going to keep paying. All right, red flags. We've got to look at where can we get burned? What are the risks when we're talking about this type of investing? Well, first one is too many month-to-month leases where the tenants don't have any long-term track record at the property. So that could be a red flag where the landlord just put all these people in basically for free. It looks good on the rent roll, then you buy it, and then they all leave because they really don't have a legitimate business in the first place. Second thing, this one I'm passionate about, single tenant risk. Now, I've built a 150,000 square foot distribution center outside of Boston on spec, meaning I had no tenant that was lined up to lease it. That's a tough investment, very capital intensive. Luckily, I have one tenant in there for 90,000 square feet, but I still have 60,000 square feet vacant. And I don't want that single tenant risk anymore. And I don't want my investors to have it. And I would caution you, if you're a cash flow investor, that don't break this rule. If more than one tenant occupies 20% or more of the space, know that's some single tenant risk. Because when that tenant leaves, if they do at some point, even if they're guaranteed or their national credit, that's going to affect the rent roll, and your cash flow went from positive to negative. I mean, that's a problem, because who's going to pay for it? Well, you as the investor, or a capital call from all the other investors. That's not a fun conversation. So again, small, diversified streams of income tenants, like lots of little tenants. Not one anchor's holding the whole deal together. I'm not saying this is a hard and fast rule, but just one you got to be aware of. And then the last red flag is deferred maintenance. This is something I've made big mistakes on, where I wanted to buy a property so bad, I could put $500,000 down. I barely was able to buy it, brought in some investors. But what I didn't factor in was the true cost of all the improvements. So to truly fix the asphalt paving, to fix the facade or the front of the building, to make it look updated, fix all the lighting, to fix the broken down gates around the property, to fix the manager's office, to fix the signage, to get the right marketing in place. These are all upfront improvements that must be budgeted for. If you don't do those things, then your product's not competitive, and perception is reality. So the tenant's going to look at it and say, it's busted up, broken down, old. I expect to pay a low rent, because you get what you pay for and you're not providing value. But if it's upgraded, nice quality, then raising the rents, tenants are going to expect, okay, I'm willing to pay for this. So with any real estate investing or industrial investing specifically, HVAC, roll-up doors, parking lots, all these things take maintenance. The older the property, the more that's going to cost. If you want a great deal, you might be inheriting these problems. So go through the physical inspection and have the capital up front. Or whoever you're investing with, make sure they have that capital up front. So to close it out, the most reliable tenants in commercial real estate and industrial right now are not the one headliners. They're not the Fortune 500 companies. They're the plumber with the white van that's outside fixing your septic system or your broken pipe in your bathroom. It's the distributor with the forklift that's helping get your product to the Amazon distributor that's dropping off whatever you bought there at your house. It's the fabricator who put the cabinets together that got installed in your apartment or in the brand new home that you bought. So these are the essential businesses that we're investing in. Real cash flow, simple operations, boring, not sexy. That's the small bay tenant. That's exactly what we build our portfolio around. So if you're interested in more real estate investing, then reach out to me. I've been in the business 20 years. I love talking it. My company buys these types of properties and we service 1031 investors or answer any questions just if you have general real estate investment questions. So give us a call, set up a meeting. We could talk more real estate and the investment strategy that we're focused on.